Good morning. It's John Thompson. Today we're going to do our Borrow Smart, Repay Smart lesson. And today we're going to talk about something that's very interesting to me and I think very impactful for a lot of people, which is reverse mortgage. We're going to deal with some of the myths that are there. So let me go ahead and move over to the slides I want to show you. All right. So again, today we're talking about reverse mortgage myths. One of the things that people commonly think is the bank is going to take my home and my equity. And so when you kind of think about this, what it really means is that senior homeowners who qualify for reverse mortgages are concerned that they're giving up control of their home and the equity. And then a correlation of that myth is then what really happens to my equity and will it be there when I pass? Because then you start to talk about family conversations and legacy planning and estate planning and things like that. So let's go ahead and talk about that. So at the end of the day, a reverse mortgage is just like any other mortgage. It's a mortgage. The lender doesn't care about your home. They're not interested in your home. It is simply a mortgage product that allows for a different payment stream. The homeowner always maintains the home. The home, however you own it now, within trust or individually, is how it stays. And then when someone has passed away, all equity in the home goes to the heirs, just like any other home. The one big difference, though, is that a home is really the only source of repayment on a reverse mortgage repayment versus traditional mortgage, meaning that if your home's upside down on a reverse, you don't owe the difference, but on a traditional mortgage, you could actually owe the lender the difference. Oops. All right. So let's do a quick comparison here. We're going to compare a $750,000 home, a $250,000 traditional reverse mortgage, and the borrower was age 68. All right. So here's a traditional amortized mortgage. They took it out 14 years ago. There's 16 years left. They owe $250 now. The mortgage can pay off in about another 16 years. This black line represents the amortization as it comes down. They're going to pay $115,000 in interest, $245 in principal, so for total payments of $360,000. And of course, the home value, and we're assuming it's appreciating at 2%, is the number that we're using here. So the home value is about $1,030,000 down the road. So there's all that money is equity. The trade-off here is $1,879 payments are being made. That $1,879 represents over 16 years represents $360,000 in cash flow. So that's $360,000 in cash flow that goes partially to the lender and partially into the equity on $1 million projected home. All right, so now let's look at a reverse mortgage on the same thing. They pay off their mortgage. They get a reverse mortgage, which requires no payments for the rest of their life. Now let's look at it. Here's the home value again going up over time, 16 years. The numbers down here is about a little bit over $1 million. The red line represents what the amount of the debt is and the deferred interest, because if you're not making payments, the mortgage balance is going up. So they owe $508,000. A side benefit, or a really important benefit of reverse mortgage, you get a line of credit. So they had a line of credit on the very beginning day, a line of credit to access, and it grows over the years. So that line of credit is now worth $290,000 at the end of 16 years. The borrowers can access for other needs if they need to. But if they don't, of course, that's equity as well. So in this situation, they owe $508,000. The property is worth a little bit over $1 million. It's got $521,000, in equity in the property, right? Plus they have this line of credit that's available to them as well. So granted, it's a $500,000 difference, but again, the difference was, the cash flow, this $360,000 in cash flow. What would have happened with that? Now this slide here shows you what the total loan balance is. It's going up over time. Here's the $508,000. Here's the line of credit growing over time. Here's the home value growing over time. And here's the home equity. If we paid this all the way out until they're 94, the loan balance would be $784. The line of credit would be $447. The home value would be almost $1,003,000. There's about $5 million in equity. So there's still quite a bit of equity in the home. And really the key question is, what's this $360,000 in cash flow? What's more important to the homeowner now? Which creates a sustainable plan? And there's nothing wrong with either decision. Both are good decisions. It's simply, who's going to be using this asset for a sustainable lifestyle. All right. So going back to the myth, the bank's going to take my equity and take my home. No, they won't. You can default on a reverse mortgage, just like any other mortgage. If you don't make your property tax payments, you don't make your insurance payments, you will default on the mortgage and they'll foreclose against you. You must live in the home on a reverse mortgage. There's a lot of information out there and a lot of bad news around reverse mortgages. That the bank comes and takes homes, there's foreclosures and so forth. 95% of those foreclosures are because the property taxes were not made on time by the homeowner. There were not a situation where they didn't comply with the other terms of the mortgage. And oftentimes it's the second person. So when it passes away, the person who's still remaining in the home doesn't know what to do. And so that's a lack of education there. And we really try hard to prevent that. So at the end of this is a personal choice about using an asset, the home equity for income planning. Again, it depends, on a personal situation, right? It requires understanding and other people on the conversation. Any equity in the home goes to heirs, just like any other home. And again, this is a reminder that the home is the only source of repayment. You can never owe more than the home is worth on a reverse mortgage. So I think when it fits, it's a great product. It makes sense, and it's all a matter of educating, which, as you know, we love to do. We always like to talk about education and how everything works. And so if you'd like learning more about this, please let us know anytime. All right, have a great day.